So welcome back to Everything Marketplaces, where we talk with founders and leaders on some of today's top marketplaces. So I'm actually going back to reshoot this intro for episode 57, which is for a really incredible group chat that we just had with Kendrick Nguyen, who's the founder of Republic. So Kendrick was an early team member at AngelList before he then went on to start Republic, which has become a leading crowdfunding platform for raising and investing in startups. So this is a really incredible chat that we had with Kendrick. We did jump around a little bit, but we started off by doing a kind of deep dive on Republic as a marketplace itself. We went on to then chat about fundraising for early stage marketplaces and startups on Republic, and then did a Q&A for those that were on the chat. So I'm just going to cut right into Kendrick sharing a little bit more on his background and then the founding story behind starting Republic.
Yeah, absolutely. And Mike, thank you so much for having me. Super excited to join the community. I started out, actually I was a lawyer, grew up in the Bay Area, immigrated from Vietnam, spent a little bit of time in asset management, more than just a little bit of time, and actually went back into academia to teach law and research law, and became general counsel of AngelList after a couple conversations with Naval Ravikant in 2012 or 2013. Actually, he led me to buy my first Bitcoins because before the interview, I knew that he was a big fan of the technology. And I was like, God, it's going to come up during the interview. And it did. And so because of that I bought just, a few and held on to it. At the time, AngelList was just a informational site, venture hacked, then AngelList, which is, providing information on venture financing. Then they launched that syndication product. So they themselves became a marketplace, right? And but heavily regulated. And so they brought on me as, I think, the first non-engineer hire and the company's general counsel.
That's some really incredible experience. And wow, I mean, where do we almost start with that? But let's jump into a little bit of Republic. So what was like that kind of like the founding journey like?
Well, first of all, let me define what we were at the outset. AngelList is a investment platform or marketplace, but for the rich. You got to be accredited in order to participate. Republic took advantage of a legal regulatory change that happened in 2016 that allowed anyone to invest. But the market didn't exist, right? So we're a marketplace in a market that didn't exist because most people did not know and still do not know what investing means. Most lawyers have never invested privately. Most doctors have never invested privately, much less anyone who is not as wealthy. So in the early phase of us, we had the vision of building this two-sided marketplace for all things investment. But at the early phase was like, how do we incubate and slowly spread the word and try to make things work? So the ambition was just trying to survive rather than tackling a market because there wasn't that market.
And yeah, so I mean, marketplaces are incredibly challenging to start, right? And especially one as you mentioned, with the regulatory kind of challenges. So like, what were those first steps like then starting?
Yeah, we're a two-sided marketplace in that we need investors to come to us and we need deals that they can invest in. So at the very beginning, it was a dual approach, which is leveraging our network of advisors and the affiliation with AngelList, which was the very first investor in Republic, and the network to spread the word out, and separately convincing, tracking down deals and founders that we think would be down to do something that no one has done before, which is taking in, a few thousand non-accredited investor. So that sales cycle was very long, and it took us, I don't know, maybe I pitched 800 or so different founders over a 2-month period to convince 10 of them to launch campaigns on Republic when we launched in July 2016.
Wow, that's pretty incredible just to think what it was like then and then kind of seeing it now. And I guess it'd be pretty helpful to give us some context for the scale you're at today, maybe.
Yeah, well, I mean, in the first year, I think from launch to 12 months after that, we only moved $1 million in total investment volume. In 2019, that became 20 plus millions in over the year. And I think just in May, we did more than May of 2021. I think we did nearly 80 million in just 1 month, right? So the growth trajectory of a growing industry, I think we benefit from the market maturing as we continue to mature. So the advantage, the difficulty of building a marketplace in a market that doesn't exist is that there's a high probability of you not making it, since there isn't a market that's ready. The upside of that is that if it works, then the dynamic of a growing ecosystem, just like the rising tide, will carry the market participants as well. And we definitely are both a beneficiary of that dynamic, as well as a contributor to the growth of this sector and the industry overall.
Certainly, yeah, I would say, yeah, you're probably one of the first kind of crowdfunding platforms.
Yeah, no, when we launched in July 2016, there were at least 5 others that launched earlier. And at one point, Indiegogo, with 15 million plus users, got in the game, in the investment game, and they decided to not do it about a year and a half later. Just to say that in this market, even when you can bring 15 million customers to one side of the marketplace, if you didn't know how to work the other side, still would not work. But no, we weren't the first, but hopefully we're not the first to exit. We're certainly not the first to exit, and we hope to be here beyond my lifetime. So
yeah, that's great. Thanks for sharing with us. Yeah, and you did mention both sides of the marketplace. So we'll jump into that a little bit more. So could you just kind of give us like an overall kind of breakdown of Republic, maybe as a marketplace business itself?
yeah, so Republic, at the end of the day, our goal is to be the investment platform where anyone, anywhere around the world, whether you come to us with $20 or $2 million to invest, you're gonna find what you're passionate about and actually invest in it. It may be real estate, it may be early stage startup, it may be a game, it may be music and movie down the road, and certainly new technology like cryptocurrency. So the end goal is to make investing as simple as buying a product on Amazon. But Amazon is pretty much just in the US. Imagine a platform like that globally, but investing, aligning interests. And I have no doubt that this trend toward micro ownership is something that we're going to see global adoption in the years and decades to come. But the regulatory hurdle and trying to build this, not just in one country, but in multiple ecosystems around the world and bridge them together is a daunting task, but it's an exciting one.
No, it's quite a task, and it's an incredible mission overall. So hats off to you and the team for what you've achieved thus far, and what's ahead. So I had a question for you out of curiosity. As marketplaces typically kind of constrain the categories early on, but you did mention across I guess we could call it asset classes maybe. So startups and real estate and crypto, for instance. So what was that kind of like expansion like for you, and how did you kind of think about that?
Well, out of the thesis that every single platform, including marketplaces, you got to define who your number one customer is. Now, in our case, we have founders on the one hand of the two-sided marketplace and investors on the other hand, but we got to pick one. In the earlier phase, we picked founders because we want the experience to be as simple as possible. And we want the most credible founders to come so that they provide value for investor down the road. Once we have simplified that process, we switch our focus to now being on the investor, and it has been for the past couple of years. So if you look at our demographic of potential investors, that's the general public. Not everyone is for the binary risk and return model of venture financing. Some people love real estate. Some people don't care about real estate, but they love, games, and they want to be able to invest in video games. So if we want to attract a wide range of customers, we believe that we got to be able to deliver products that meet their needs. And given that we have the layer of infrastructure that makes private investing simple, why not add on new products that are relevant to our own investor base? And to give you one example here, when we launched real estate, Republic today is the only platform, as far as I know, that you don't have to be a millionaire to invest $200 in a residential real estate and get some upside when they sell that real estate for a gain. We saw a ton of immigrants and certain, people from certain background investing for the first time on Republic, even though they've been on the platform for years. They didn't invest in tech startups. The moment that we launched the first real estate deals, there are like a ton of old-time user who are now first-time investors because it's something that's relatable to them and it's low risk. So really following the needs and the demands and the interests of our underlying investor base that guided our path towards becoming a multi-asset investment platform.
That's super interesting. So what would you say is your primary category right now?
Well, early stage tech startup was what we started out with in 2016, and that is still a dominant vertical. But I wouldn't say that there's a primary focus. We do a great deal of volume in growth stage, in real estate, in revenue sharing, in small business financing, Houston and beyond. And in the future, you're going to see a push into entertainment financing. Starting with video games, but likely will be extending to sports, music, and movies and theaters.
Awesome. And then, so I had a question, someone asked it earlier in the group, which was, how do you guys monetize, and, what's your kind of, revenue that you're getting from these deals that you're syndicating?
Yeah, one of the challenging thing about our business model, in addition to being a two-sided marketplace, is that it's heavily regulated. Even how we monetize on a deal, mostly regulated. But in short, we get a cash commission out of every successful financing that happens on Republic or related to Republic. We also have an upside potential in that company, that real estate project, that video games that are being listed. So a cash upfront similar to Indiegogo or Kickstarter, and an upside potential similar to AngelList. In a way, the best of both worlds.
Awesome. And did that kind of evolve, or was that regulatory, in place early on, and that was kind of like the confines you had to work with?
Yeah, things evolve, and I think building a marketplace in any industry, technology and otherwise, I think it's important to remember that you should take notice of what has worked for other people, but don't assume that there's a status quo that should just be. Venture capital in our industry, in our line of business, is something that's been around for 50 years compared to human evolution and human civilization of like 5,000 years plus. It's a beta product. So how carry interest, fees, and all aspect of it is, up for being rethought and beta tested in new variations, and I'm sure that applies to most sectors and industries as well. So yeah, we set that fee structure at the beginning, but it certainly has evolved over time as we introduce new products, and we may have different fee structure for different asset classes.
Awesome. Yeah, I love that, input there. So, what are overall as a marketplace, what are maybe some kind of key points where, how Republic has evolved as a marketplace itself?
Yeah, building a single-sided marketplace is difficult enough. But, if you build a two-sided marketplace, just know that as a VC looking at a two-sided marketplace, everyone knows it's tremendously difficult. So usually that's very hard to fundraise because they're like the probability of not being successful is very high. So know that at the outset. But I think one of the things that I think every marketplace should focus on is on community. I think people focus a lot on product, which of course is highly relevant, and making sure that your product has product market fit. But at the end of the day, I firmly believe that the true the aspect that powers a marketplace in the long run and in a scalable way is community. So as you onboard these users who come to you to buy things, how do you think of a strategy to engage them so that they come back to the platform, even when they're not looking to buy your product? If you manage to crack that, then yeah, it's hard to put a dollar value to it, but it doesn't matter what you're going to be selling. If you crack that community angle, you pretty much guarantee success. And I think that when you pitch a marketplace concept or business that's beyond just the ideation stage, make sure to build in there a narrative about how you're thinking about turning your customer base into a community, even if you haven't yet executed on that strategy just yet.
I love that. So community comes up pretty much in every chat we have now. So that's really great. So what are some ways that maybe you guys built community early on with Republic and then kind of cultivated that?
A lot of attempts to do different things, and probably 8 out of 10 didn't quite provide the output or the ROIs that we were looking for. And even today, I think outside looking in, people may think that Republic has a relatively strong community, but we are still revving on it and trying to push out new ways. But for example, I think defining a mission for the company, for us, access and inclusion and fairness when it comes to capital raising and the power to invest it's the core of why we do what we do. And that mission was relatable enough and specific enough to build a community around it. But even if you're selling a tea, a marketplace that you sell tea or whatever it may be, you got to be able to deliver a clear mission and corral community around it. So I think that's one. The second one is just people want to see faces behind a brand. And I think founders who are a little bit too shy on putting their faces out there, just bring on team members who are willing to do that for you. And I think that's, and the ability to use and leverage and try out different forms of social media, I think is also key. We very lucky to just onboarded the founder of Reddit, Alexis Ohanian, as an investor in Republic. And there's a lot of learning that we can look to what he and his team had built over the years at Reddit. But here's a way to build community that, just content-based, and it worked. And it's just community product. So there is a way to build not community through content and through people, which is based on product, but that's a difficult, obviously a very difficult nut to crack, so to speak.
Yeah, you guys have done a great job at that, though, from what I can see on social and whatnot.
So. Thank you, Mike.
Yeah. So I had a question for you. For I would say like overall kind of metrics or kind of KPIs. I guess first off, we can start by what are some of those, if you could maybe share with us.
Yeah, for us, and I think for a lot of marketplaces, gross transaction volume, or in our case, gross investment volume, is probably the number one metric. And then the number of users, as well as active users, in our case, investor, that is those who come to the platform, establish a profile, that's a user. And when they actually make the first transaction, in our case, making the first investment, that's an active user. So those are like key metrics that we aim to track over time. And it doesn't have to be, monthly. Again, if you're on the path or aim to fundraise from VCs, then you gotta do your best to make sure that quarter after quarter, generally it tracks, upward. The steeper the curve, the better. So I would say those are the two main metrics on our side. The quality of the deals that we bring on board also matters a great deal.
That's great. Thanks for sharing with us on that. Yeah, I was kind of interested to see, when you introduce a new category, with an activated kind of user, if they would, maybe what were some metrics around them investing in other categories too.
Yeah, repeat user matters a great deal. So today, an investor in Republic would invest on average in 3 different deals. And we hope to, through engagement, through community, and through products like Autopilot, that would raise that average repeat investment, hopefully one day to 30 and 100 and a few hundred. Because when it comes to our industry, diversification is the number one goal. That doesn't mean that there aren't people who just love one single product and they come on the platform to just invest in one thing. It's up to us now to then engage and present products to convince them that, hey, you came here to invest in a video game, but take a look at this, amazing female founder building an amazing ad tech company in your region, and perhaps it's worth your $50 vote of confidence.
That's awesome. Yeah, and I love the feature for the autopilot that you guys have too.
Awesome.
Cool. So we've discussed Republic as a marketplace itself here. So I don't want to spend too much time on that because I know we have a lot of founders here in the community that are eager to chat with you. But before we do, I do want to jump into fundraising for marketplace startups specifically, and I think we all have a general kind of overview of the landscape when it comes to fundraising. But how does Republic kind of fit into this?
So fundraising. The entire landscape of fundraising is rapidly changing. As you guys know, even down to the concept of which one is the best accelerator to come to. It used to be that if you get admitted to YC, that's like, the thing to do, right? It's like getting admitted to Harvard. But things it's changing. I hear from founders now who no longer want to give up a significant percent for $140,000, $150,000. And you have new accelerators or models like On Deck, which are both in real life in multiple cities in a very engaging way. So that's just one. I think that between what friends and family means, what a seed round, a Series A, and evaluation, all of that is changing. But more importantly, any, I think, company that has a community, not only that they should look at their community as a source of capital, just know that their own community at one point will want to be able to be an investor, even just a little bit, so that they have a little bit of skin in the game. So it is about community incentivization. So if you're on the earlier phase and you're thinking about strategically, just know that as a marketplace, by definition, you are going to have a lot of customers. And if community is a key attribute to your future success, how to empower the community and engage them and incentivize them to come back and evangelize and act more. Giving a little bit of equity is one way to do it, and in return, there's a very powerful way for a company or a marketplace to fundraise. Gumroad, I think many of you may know of Gumroad. Sahil did a $6 million Series C, and he did $5 million of that from his own community, raising through a Republic campaign, closing $5 million in about 12 hours. And the $1 million remaining was allocated for VCs and Navar Ravikant. So I think you're going to see, if not the game being turned upside down, then at least retail capital or community capital will be growing in its importance and in its contribution to the overall financing needs of a growing company. assuming that it has a community.
Yeah, yeah. No, I love the term community capital too. I think that's great. And yeah, I was I did want to jump into talking about how marketplaces might be uniquely positioned to leverage kind of crowdfunding with their community. If the earliest kind of Airbnb host or some of the marketplaces in the group, if they're the early community that really believed in the marketplace, had the ability to invest, how much that could kind of amplify.
And I don't know how many of you guys are aware that in 2018, right before they IPO'd, Uber, Lyft, and Airbnb asked the SEC for permission to give away equity to their drivers and like the people who list homes in Airbnb, because there was such an outrage that here's Uber going IPO, and yet all of these people who helped build the company did not have in any way a little bit of upside in that event. And the SEC said, no, we're not going to give you any special exemption. You use the law, the legal framework as it exists. And Republic now has the product so that the next Uber and Airbnb can leverage us to give away equity. And even then, you still have to do it compliantly. But as late stage as that, there's no better example or validation for the need to not only to engage and incentivize your community, but to meet their expectation of being treated fairly. And fairly doesn't mean that they got to be millionaires. It's just the notion that like, hey, we want to be part of the story as well because we help build the company.
Yeah, I actually did know that. That's pretty interesting. Yeah, so I think it would also probably kind of change things for you. And I think a great example is Sahil with Gumroad. He was actually a group chat guest a while back with us. But in that case, did he kind of use Republic and the kind of infrastructure, and he obviously drove the demand. So that's a little bit different dynamic than a deal being on your platform and then you providing the demand.
Very, very much so in the case of Gumroad. He didn't need our distribution channel, which is our own investor base. And we now have well over 1 million users, over 120,000 active investors. But in cases whereby a company has a smaller community and need to resort to Republic for capital, we obviously have the ability to fund companies from our own investor base. And it's also an amazing marketing and exposure initiative, right? A typical campaign on Republic probably would receive more than 5 million or so views from between Facebook ad on the page and like all the media effort that we roll out. Typically, a company got to pay a lot of money just to get that kind of like, just eyeball exposure. And now they're actually bringing in money and converting a bunch of like, new fans who are now ambassadors for the company. So the value proposition is not just for those with a strong community. Those with a strong community will have a simpler time raising, and those who are looking to build a community got to put in, a bit more effort to evangelize, to go out there, to pound the virtual pavements, and convince everyone that they know and their friends to take a look and come in. But for sure, I think we even fundraise for companies that are brand new and don't have a strong personal network, but they probably wouldn't be looking at raising 5 million. They'd probably be looking at raising $100,000, 200,000 to kickstart or to bootstrap and get their company going.
Awesome. Yeah, that's pretty compelling. Be ready for a lot of messages from founders here in the community, probably. Yeah. So you did mention the example of the first kind of couple 100,000 raised and just at the earliest stages. So could you maybe walk us through who that ideal kind of, we'll just use marketplace in this example, who that might be and the stage for them as a business, and then what that process looks like?
In my opinion, if you have the ability to raise capital from VC to seed your business or friends and family, you should do that probably before resorting to community capital or retail financing through Republic, because the main value of running a retail campaign on Republic is that exposure. So if it's pre-product, pre-launch, you don't have anything that can capture the attention of the general public, you're kind of like missing out on the main value of doing a crowdfunding campaign. And secondly, it's easier once you have at least some form of a community of a network of believers in what you do, or if you're part of a community like like this one, Everything Marketplace, and your friends in the community want to back you. But I think that it's more effective for post-launched marketplaces to consider fundraising through Republic or otherwise, and that's something that probably should be revisited once a year. Every single year you can raise up to 5 millions, and maybe every single year for the next 5-6 years you raise a round from your own fan base, from your own customer base, to grow and expand your business.
Awesome. Yeah, I think you brought up Everything Marketplaces in that. It'd be pretty cool to have like a curated section, where founders could offer a round for other community members to invest in.
I think to go down further down the road is that any and every community, there's a way for people to align interests and share in each other's success. So it may be that everyone here that like, hey, if you're very active in the Everything Marketplace community, then somehow you also have a little bit of an upside in every single founder or company that's part of that community. And that way you're just more incentivized to share ideas, to support one another, and economically align in that regard. More than happy to help you might think through how that would work in terms of like legal structure and execution at one point.
That'd be amazing. We'll definitely have to chat about that. And yeah, I'm pretty sure everyone in the community would like that. So. Well, cool.
There's a token economy based on a blockchain leverage model that we can hash out as well.
We only have an hour, so we don't have time to jump into that. That's a whole other topic. So
for sure.
Yeah, one I'm super interested in. Cool. So we have a lot of questions here. We're gonna just go ahead and jump in a few if that sounds good to you.
Of course.
Hey, Levi, do you want to jump on?
Yeah, absolutely. Ken, first of all, thanks for this time. I wanted to say that I've loved just the broader Republic team. So Cheryl Campos has been super helpful as a Latinx founder just in those communities. Also really enjoyed the conversation that you had with Jason Calcanis on Twist. I thought that was like some great observations there of just like how the funding landscape has changed. Really, there's two like core questions that I have for you, so you can choose either one. One of them is like, what's the sort of like what was the founding moment for Republic, right? Like, was it the experiences in Republic, or has it always been sort of a notion, behind like trying to help the little guy, or just trying to like change the world there? Or the second one is, I just listened to Mike Maple's Starting Greatness podcast, and there was more, and they're talking about crossing the chasm, and I'm wondering if now you guys have sort of like aggregated data across multiple startups, that fundraise, that as you guys have, and from the investor base that are really early adopters, that you can begin to see like, oh my God, like as these folks are starting to like, back a startup early on, this one has the chance to sort of break through to get that funding goal, or to even go beyond that, because you've now sort of, you've aggregated that data over time. And so, yeah, feel free to go with either direction there. I know that they're two sort of opposing, but thanks for your time again.
Yeah, Levi, it's such a pleasure meeting you, and thank you so much for the generous feedback. These are hard questions. We definitely have a lot of data, having had over, I don't know, maybe 20,000 applications more over the years, and keeping track of them and analyzing. One thing that I think my takeaway even now, and I'm down for revising or changing my perspective down the road as an investor, but I don't think there's a one size fit all lens that you can use to judge what is a founder who's likely to succeed. I think we all tend to use lens that we're familiar with based on our own background, based on our own, the school that we went to. But from what we've seen, people and talent do come from
Yeah.
all shapes and background, and I
So
think that is, yeah.
okay, no, so no, no, absolutely, I agree with it. No, I was more so talking about successing in being able to fund their campaign on Republic.
Oh,
100%
gotcha.
agree with you. Yeah. Just
Yeah.
wanted to make that clear. Yeah.
Yeah, and just completing that thought, I would just say, gotcha. But I think hustle and resilience and perseverance, I think is probably the one common trait when it comes to companies that are most successful in meeting their fundraising goal. The one attribute is that they and the team, to the extent that they don't already have a large community, are committed to having the bandwidth and execute the strategy of the campaign, at least as we provide it. So it takes a lot of work to, like, you can't just send out one email to your family and friends and following and expect people to open the email and do it right away. If you're reluctant to send out the same email 3 times over 2 weeks, probably you're not going to have like a very successful campaign. So it's just the willingness, and it is time consuming. Fundraising on a platform or pounding the pavement on Sand Hill Road, it just takes time and work. Unless you already have 1 million committed customer, then that's a different story. But like Sahil and Gumroad, you can't believe the work that he put in months and months ahead of time on Clubhouse, on Twitter, to do this. So it's just that bandwidth and the willingness to execute. And going back to your first question, about the moment that Republic came about, I really think it was when knowing that AngelList would not be able to take on this business model because it's so heavily regulated, and realizing that, hey, I'm interested in seeing this done because I came from a family who were and mostly are non-accredited, but we grew up in Silicon Valley. And so the catalyze, the desire to be relevant to headline news about all of these innovations and companies that are, doing well, and they have products that we use. Why shouldn't everyone be able to invest $10 or $20 in that? I think that was probably the precursor to ultimately committing and seeing Republic through.
Awesome, thank you.
Awesome, those are great questions, and thanks for sharing with us, Kendrick. So
amazing.
Cool. Awesome. Muck, did you want to jump on?
Yeah. So this question is a little bit of a preamble. Thank you, by the way, for taking the time, Ken. So you mentioned that initially what allowed you to start this company, or what the reason for starting it is because of a legal change, right? That changed the game, essentially the landscape, right? But at its core, I feel like what marketplaces come down to, especially when you're dealing with investments like you are, right, is trust in your screening process for the supply side of like the investment opportunities for you, right? And it comes down to trust, and it comes down to whether you're able to actually source those deals, right? The combination of those two things. And increasingly what I see, so you have your legal moat and then you have your trust moat, right? As Republic, right? And so what the trend that I see increasingly, especially with like Twitter, is like VCs, as like individual VCs are really cultivating their brand, right? Like they're really building more trust in their brand, and they already have trust in their investments, right? So like Andreessen releases new series, and when they release a new series, everyone's talking about that new series, right? It's like their social strikes back, or whatever, right? And so is there a legal moat that prevents, like, VCs is just an example, right? Other institutions or people with trust in their investments, right? Which is one of the things that makes you valuable to your users, right? What stops them, if not the legal moat, from entering your space, given that they already have established trust?
That's an awesome question. And the answer is this: you're correct that there is that legal requirement that anyone can take in accredited capital on their own and do a fundraising round just on their own website. You have to go through a platform like Republic in order to take on non-accredited retail capital. So to give you an example, say Kylie Jenner her next lipstick brand or whatever cosmetic brand or furniture brand, she obviously would have no problem fundraising from her, I don't know how many tens or hundreds of millions of fans she has, $10 each. Forget about the fact that we have products that can make that experience far simpler. More importantly, we have the infrastructure to facilitate both legally and from the payment settlement perspective. So the future for Republic is acting as that infrastructure, as that platform for creators and influencers and those with their own communities to use and engage with their community through equity, if that makes sense. Because it would be so tremendously difficult for them to build out their own infrastructure stack just to facilitate private investing. It's an exceedingly onerous, timely, and burdensome process.
Yeah, that's why I used the very specific example of like andreessen VCs, because like for one company or for one individual to do this would be like, it wouldn't be worth it, right? Like, why would they build out this entire infrastructure, legal structure, et cetera, right? But if, like a Sequoia, right? Like, I would love to get in on the Sequoia seed round, I don't care what the company is. Like, their name means that to me in theory, right? Yeah. Like, if they wanted to build it, right, it would hypothetically be worth it to them. But it makes a lot of sense, actually, that you want to be a product for that to facilitate that rather than have them build it out. That makes a lot of sense.
My thesis is this: those who run investment firms is because they're good at investing, but they're not good operators. That's why you don't see the Sequoia or the Kleiner Perkins building and launching billion-dollar businesses. It's easier said than done. And even with all the capital and the wealth of the Sequoia and the A16Zs of the world, for them to launch a investment platform is an exceedingly difficult thing to get done. But on that example, many of you have already seen this deal I just shared in the Zoom chat. This is the very first example of a VC fundraising from its own community. That's Backstage Capital, $5 million in 1 week from largely her own community.
It's super interesting. Thanks for answering that question.
Of course.
Yeah, that's a really good question. So I did have a question earlier on in the community, Kendrick, which was, a founder was asking, what's the typical kind of instrument, or is there one, like, say, for instance, like a safe note when they raise through Republic?
Yeah, so a lot of early stage startups raise on Republic under a safe, but a derivative of a safe called a crowd safe, in that, it doesn't mess up your cap table. It stays as a safe for a long time until the company sees an exit, that is, M&A or going public or what have you. But some companies do raise straight up on common stock or preferred shares if they're later in their maturation cycle. Some companies does revenue sharing. That is, it's not really selling you equities, giving back, giving you revenue distribution over time. But it's very case specific, though. I would say the safe or the crowd safe is still one of the more popular instruments that we see companies use to fundraise from the crowd.
Interesting. And then I'm assuming there's like no provider on that, but what about like information rights? How does that kind of work with the crowd safe?
The company, the law already requires every company to provide, some limited disclosure about their, revenue, their debt and liability, and major material information publicly, and we help companies through that process. There isn't an additional requirement to provide beyond anything more than a simple annual update. But in addition, the investors typically don't have the right to vote. Quite frankly, if you invest $20 in a company because you love the product, you don't want to be pester with like, hey, can you vote in this corporate action? You probably don't care to know what that even means. So that hasn't been a problem, that the lack of voting rights and limited information right for retail investors. Now, on the other hand, I think any company that is doing a retail community capital round got to have the willingness and see the value in actively engaging your now investor base. They're going to be the first cohort of customer that you should better test your product with. If you have an issue, I mean, you know that they're parting way with money that they may not see again ever because they believe in you so much. So anyone who's like very wary about engaging that investor base, you should really think twice about doing a retail campaign. There may be better options that more aligned with your interest.
That was a perfect segue into bringing up, how do you kind of, or maybe what are some tools that you offer through your platform when, after a founder successfully raises for their company through Republic, how do they kind of then engage and, activate their new investor community?
Yeah, we even built out a tool called Social Capital. And I'm going to post the link in the chat box here. But if you Google Republic Social Capital, the first link that shows up is a product that we actually rolled out to empower companies post-closing a campaign on Republic, a simple way to understand who are these investors, what value that they can potentially add to you, and how to reach out to them and engage them so that they bring the value, the social capital that you're looking for in addition to the financial capital, for along on your journey, among many things.
Awesome. Yeah, we'll definitely, I'll include that in the description of this too, so that way we can all check it out. So cool. Hey, Gordon, do you want to jump on? You might be the last question here.
Oh, no pressure, Mike. Thanks very much. Ken, that was a great talk, by the way. So I kind of have two questions. So the first one is, of the different platforms, whether it's Republic or WeFunder or Start Engines, did you naturally kind of bifurcate into areas where each company specializes? Did that just happen? Did the market kind of decide that? Or that's kind of one question. And then the second question is kind of the anatomy timeline of it, when a company does. Do you suddenly just wake up in the morning and say, you know what, I think I just want to crowdfund on Republic? I'm sure it doesn't happen like that. I'm sure there's a 2 or 3 month lead time and things that you have to do. And there's probably a whole anatomy and timeline and sequence of events of how that happens. So you can take the questions in order or however you want to.
Pleasure meeting you, Gordon, and thanks for two excellent questions. The first one is about the space and other platforms in the space. The industry is still brand new. I mean, how new is it? If you just ask, your cousins or friends or like whoever you're eating lunch and the person sitting next to you, most people don't know anything. They don't know that they can invest privately. So it's still very nascent. So the platforms, there's some overlapping elements in that, a lot of us, take on equity tech deals, but there are a lot of differentiators. I have no doubt that as the industry matures, there's going to be specialization, but we aim at Republic to be the generalist go-to platform. And if people want something very specific down the road, that there may be other platforms for them to consider. Right now, for those who are assessing which platform to go with, whether to invest or to launch a campaign, I would say go with your instinct. It's kind of like human beings. We all have 2 ears, 2 eyes, 1 nose, and a mouth. But, when you hang out with someone, some people you just vibe with better. So the equivalent of the noses and ears and mouth and whatnot is like the team, the look, the type of other company that you see on the site, and goes with whichever one that speak to you. But ultimately, you going there to make an investment. So do you see a deal that you really feel passionate about, that you kind of like want to see this deal succeed? And if you do, then I would say, even it's on a platform that you are like indifferent about, I don't know, consider supporting that founders, because ultimately it is the underlying company, the underlying innovation, the underlying team that you're supporting, that you're betting on, that you're voting on. So that's one. The second question about the stage that a company should be thinking about fundraising or fundraising for the community. Now, one is capital needs, and you should never wait until you're about to run out of money to start fundraising. Certainly not to fundraise from the community. So if you're gonna begin to think about, if you already have a business going and is growing and everything else, at least 6 months, if not a year out before, your runway, before you run out of capital, that's when you should actively put together and quickly executing a fundraising plan. Now, if you're short on time, direct friends and family and venture financing or loan is quicker than running a community capital raise. If you have adequate time, if you're not under a cash crunch and you have a strong community, or you want to build a strong community, or you want to get that exposure to your platform, to your product out there, then yes, then it takes about, after getting accepted on Republic, and we accept right now still well in the low single digit of a percent of applications, it takes about 3 weeks to 4 weeks from the moment that you sign the campaign agreement to when you can launch that campaign. And then it takes another at least a month to 3 months to finish the campaign and then collect the capital. So all in, from the moment that you sign the campaign agreement to the moment that you can actually see money in the bank is, at least 2-3 months out. So all the more reason why community capital and retail financing really are for those who have the bandwidth and the luxury of time, and who can activate the social capital value beyond just needing money and closing a round quickly.
That was a great answer to both questions. Excellent, thanks.
Thanks, Gordon.
Yeah, thanks for the good questions, Gordon. So cool. So we are almost out of time here, and wow, we jumped around quite a bit though. But this is super interesting, and I appreciate sharing all your great experience with us here, building a marketplace, and then seeing so many raised through the Republic platform. So I'd like to ask a question, as towards the end of the chat to wrap things up, which is, what's one maybe kind of interesting moment or funny story throughout your journey building a Republic as a marketplace itself that you can share with us?
I think a funny moment out of building Republic was that there was an opportunity whereby a major investor of ours suggested that Republic, having a what she deemed to be a very talented team, that why don't we build a business model that can easily or pivot into something that would be immediately well monetized, tens of millions right off the bat. Do that, but only focusing on accredited investor, and drop our model of investing for the general public at a time when we probably had one live campaign on the homepage. And I thought long and hard about it, and the answer at the end of the day, and I did lose one night of sleep over it, was like, no, we're gonna keep on doing this, even though it may very well be that we are gonna go out of business in 6 months if things don't pick up. Because at the end of the day, the other model, my heart wasn't just in it. It was just straight up for money and for growth, but lacking in that core mission that I believed in. I'm sure someone else would believe in that mission more. So oddly enough, now looking back, it was the most difficult decision. But along the way, I wouldn't say that it was based on my, foresight or anything. It's just that perseverance and a lot of luck. Many things that had happened in the past 3 or 4 years. Had it been slightly different, we would be a team of 10 and struggling to build, one small vertical. So yeah, I think in life, I guess the takeaway on my end is that I think having a mission that you would rather do it and fail and go through that process than being a multimillionaire and doing something else is so key if you're going to build something that's very difficult like a marketplace. And the second one is that just keep looking ahead and persevere, and a few things are going to be out of your hands, and with some luck things are going to work out. And if they don't work out, well, you're pursuing a mission that you love, so you still win at the end of the day. So never choose, I think, money and optics and growth and success over at what matters at the end of the day is why you started out to do what you do to begin with.
Well, that's a really great way to wrap it up. So, and I think we can, a lot of us can relate here in the earliest stages, kind of thinking through that, so that's awesome. Well, thanks again for taking the time to join us here and sharing all your awesome experience with us. Last but not least, where can we keep up with you? Time for a quick plug.
Yeah, thank you so much, everyone, for listening and for asking all of the amazing questions. I'm just at ken@republic.co and Kendrick Nguyen on LinkedIn and Kendrick Esquire on Twitter. If you DM me, I'll get back. It may not be within 24 hours. My inbox is over 1,000 unread, but I promise I'm gonna get back, eventually. And if there's anything urgent, just note that in the headlines, and I'm always more than happy to offer my 2 cents or advice if there's a moment of if you panic and you don't know who else to turn to just get a second opinion, more than happy to be a sounding board.
That's a really incredible offer, and thank you so much for that. So yeah, thanks again for joining us, and thanks everyone for the great questions today. So
have a wonderful day.